What's up everybody, this is Antonio here to bring you another episode in this series of how many shares do you need to own to make $1,000 a month, $100 a month, and even $100 a week. So these videos are definitely fun to record. You guys let me know which companies you guys want me to cover. This is the current list you guys have provided, but in these episodes we do pull up the company that we're going to be covering that episode. We pull it up in Seeking Alpha, look a little bit about the charts, read about the company. Then we pull up the dividend scorecard, and then we can see with their whole dividends, and then pull up the calculator, crunch some numbers, and then get those values. And then we wrap it up with the dividend yield, kind of showing us when the best time is or was in the past to enter the stock. But in this episode, guys, the next one here, we do have the Home Depot, Starbucks, Pepsi, Coca-Cola, Target, Walmart, or Citi, is one of the subscribers commented. I have already covered Home Depot, Starbucks, Pepsi, Coca-Cola, and Target. So if there's a major price change or dividend change, let me know. I'll be happy to cover them again, but it looks like there hasn't been much change on those. So we're going to just be covering Walmart in this episode. And then next week, we'll try to cover Citi. But if we pull up Walmart on Seeking Alpha, ticker symbol WMT, it's currently trading about $161.57. If we pull up the company profile, we can read a little bit about them. You guys probably already know what Walmart does, but Walmart Inc. engages in the operation of retail, wholesale, and other unit worldwide. The company operates through three segments: Walmart US, Walmart International, and Sam's Club. It operates supercenters, supermarkets, hypermarkets, warehouse clubs, cash and carry stores, and discount stores under Walmart and Walmart Neighborhood Market brands, membership-only warehouse clubs, e-commerce websites such as Walmart.com, Walmart.com MX, Walmart.ca, Flipkart.com, SamsClub.com, and mobile commerce applications. The company offers groceries and consumables, including dry groceries, snacks, dairy, meat, produce, bakery, and so on. But anyways, they are in the sector of the consumer staples industry. Consumer staples merchandise retail employees is roughly about 2.1 million, and they were founded back in 1945. And you can actually look at them at stock.walmart.com if you want to read a little bit more about them. But if we look at the charts here, guys, on the year to date, they are up 12.51%. 1 year, they are up 20.14%. 5 year, they are up 69.43%. 10 year, guys, they are up 123.76%. And in total, they have been up 1,215.67%. Very great company returns here. 52-week range here. 52-week low has been $128.07. 52-week high has been $162.99. They're actually trading towards their 52-week high. EPS is 6.46, PE 25.01, dividend rate $2.28. The yield is a 1.41%, and then the market cap is a 435.08 billion market cap for this company. Very large company. If we look at the dividend scorecard, again, they are in the consumer staples. The dividend yield is a 1.41%. Annual payout is $2.28, so they pay you out $2.28 per share that you do own annually. Payout ratio is 34.66%. Huge room to grow their dividend, but the 5-year kicker is very low. It's a 1.86%, so they only grow their dividend for about a little bit less than 2% in the past 5 years. Dividend growth has been 49 years. I don't know if they are dividend kings. Let me know in the comment section if you do. At the current moment, I don't know, but if they're not yet, they will be very close to being a dividend king soon enough. Let me pull up the calculator, guys, and then we can actually start crunching some numbers. So first thing we want to do is try to figure out how much of this company, or how much do we need to make to, or own of this company to make $1,000 a month. So we want to make $1,000 a month there's 12 months in a year. So we multiply the 1,000 times 12. So annually we need to make $12,000. You can take the annual payout that they do pay out, which is $2.28, divided by that, and this will give you the total number of shares that you need to own. So roughly we need to own 5,263 shares, and we'd be roughly making about $1,000 a month. If you multiply it times the current share price, this will be 161.57. This will give you the total amount of money you'd have to invest currently at this current share price. So about $850,368 invested in this, and you'd be roughly making about $1,000 a month in that one. A quick way you can actually calculate this is take the $12,000 and divide it by the dividend yield, which is 1.41%, and you'll see we roughly get about $851,000 invested in that. So that's a quick way to calculate that. Let's do the next one, which is $100 every single week. This one's a little bit more achievable because you do require a lot less capital. You can actually take the previous answer divided by 10 and that'll give you the answer, but since we do have the calculator, let's go ahead and crunch those numbers. So $100 times 12, because remember 12 months in a year, so we need to make annually $1,200. And if you take the 1,200 divided by the annual payout, which is $2.28, that gives you about 526 shares that we need to own. Multiply that times the current share price, which is $161.57, and you'll see that we have to have about invested $85,000, and you'd be roughly making about $100 a month from this company, completely passive. Quick way to calculate this again, 1,200 divided by the dividend yield, which is 1.41%. You'll see that we get the $85,000 as well. That's the quick way. Let's go ahead and do the last one, guys, which I think it's a little bit better. $100 every single week. Imagine getting $100 every week to spend, on your retirement. So we have $100. There's 52 weeks in a year, so you multiply that. So annually we need to make $5,200. If you take that divided by the annual payout, which is $2.28, this will give you the total number of shares. So you'd have to roughly own about 2,280 shares to make about $100 every single week. And then if you multiply those number of shares times the current share price, which is $161.57, you'd have to roughly invest about $368,000 to make roughly about $100 a week. And that's quite a bit of money, but again, if you continue to dollar cost average, reinvest the dividends and then the dividend growth, this company doesn't have a very good 5-year CAGR, but you would require a lot less time or a lot less capital if you have time on your side. But anyways, quick way to calculate this is take the 5,200 divided by the dividend yield, and you'll see we roughly get about $368,000. But yeah, guys, that's quite a bit of money, but you guys saw on the performance for capital appreciation, that was some pretty good returns for Walmart compared to all the other companies we kind of have looked where the capital appreciation has just gone down. And yeah, but let's go ahead and wrap up this video by looking at the dividend yield. So you'll see this is the dividend yield. It'll fluctuate over time. Back in 2019, they were, or I guess you started with a dividend yield of 2.39%, which is pretty great. It's been going down, and that's probably because it's been making all-time highs with the 52-week high there, and it's been fluctuating for the past 4 years or so, back at the 1.5% or so. So yeah, guys, this is actually all I have for you this video. Let me know in the comment section if there's any other companies you guys want me to cover. I'll be happy to add it to the list, and then we'll eventually get to it. But let me know in the comment section if you are invested in Walmart, and then how long, what your yield on cost. Definitely would love to know. But don't forget to subscribe with the notification again, and I will talk to you guys later. Take care, stay safe out there. Bye, guys.